I'm really excited about uranium. The big question mark with uranium, the fundamentals look fantastic. The question is there a stockpile of 300 million pounds sitting out there that's being fed into the market that's going to keep a lid on it for a while? And we're going to find that out over the next few years. But there is one hell of a bull case. If you have a long-term exposure to this sector and you want to play electrification, play copper. It won't be substituted out. We'll need a lot more copper. Whenever the price of nickel runs up, the Southeast Asia seems to flood the market with as much nickel as it needs. So I don't share Elon Musk's concern about lack of nickel.
Welcome viewers to this virtual fireside chat with hedge fund manager and longtime junior mining sector investor, Warren Irwin. Warren is president and CIO and founder of Rosseau Asset Management based in Canada. Warren, a very warm welcome and good morning to you.
Well, thanks for having me, Adam.
Yeah, thanks for taking time to chat with us, and it's great to have a one-on-one so we can get into in depth on some of the key challenges and opportunities that you're seeing in the mining sector at the moment. Perhaps we could just start with the current state of the commodity market. You know, this is a bull run, but are you expecting this run to run for many years? What's your take on the commodities cycle at the moment?
Well, normally I would expect a bull run like this to last a decade, but I am somewhat concerned, as you and all your listeners have noticed, that things happen way quicker these days, and cycles that normally last 5 years are lasting 2 or even a year, and things happen a lot quicker these days. So we'll see what happens. But traditionally, a typical cycle would last 10 years, and I'm hoping it will be that case. It'll be a slow, gradual move. But these days, capital seems to be quite flighty, and things could happen a lot quicker and a lot sharper, and end a lot quicker than we'd historically would have expected.
Yeah, so perhaps like COVID was the trigger, but actually the pent-up demand was there. Capital's looking, to move quicker at the moment because of certain unloved asset classes, or maybe there's a lot of capital that wants to be deployed because of cash, and the dollar value isn't quite the same. Are these some of the drivers as to why capital can be moving towards commodities at the moment?
Well, just capital whipping around quickly. There's obviously a lot of people in the U.S. sitting at home trading stocks, right? Especially when you look at junior resource stocks, they're at GameSpot 1 second, they're into trying to squeeze the silver market the next thing you know, they're into copper or whatever. So it's capital is very, very fluid, but there's a tremendous bull case for commodities. So we'll see how this all pans out. And I think increasingly we're starting to see some people talking about commodities, especially some of the more interesting ones that have been out of favor for many, many years.
Yeah, absolutely. Well, one of the key themes that seems to have driven a lot of sentiment towards green stocks or mining companies within the battery metal tier is obviously the energy transition. We think about decarbonization being on the top of every politician's list, as well as every corporate's kind of list, thinking about ESG providing greater scrutiny over how companies are performing or polluting, as it were. Battery metals seems to have got a really glowing sort of status as the panacea, perhaps, within mining. Just wanted to get your take on, how fast we might get to this all-electric economy or all-electric status of living, and what's your view on the energy transition in general?
Okay, well, I'm a car guy, and I have lots of really fun cars. I've had a lot of fun cars, and I would never in a million years buy a Tesla. So I don't like them. I don't like the look of them. A host of reasons. I love the idea of electric, and I think as far as transition will be is when people like myself and others who say we don't like Teslas, they're ugly, we'd like to buy an Audi S8 in electric, or we'd like to buy, you're starting to see them now with the Porsches coming out.
Yep.
GM has a new Hummer coming out. There's a number of pickup trucks coming out. Pickup trucks are a huge market, especially in North America. There's some ugly ones coming out, like the Rivian is so ugly I could never imagine buying it. But I'm sure there will be some ones that I'll find that, hey, this is a well-performing electric vehicle and it looks half decent and has decent range, and I'm good to go. And that's when you start seeing them in your neighbors' driveways, you'll realize that we're well on our way to doing this. And it's a good trend, especially in the big cities. Can you imagine improving the air quality in London? That would be totally awesome for a lot of people.
Yeah, well, the lockdown seems to have done that, but obviously that can't sustain for forever. So yeah, EVs seem to be a solution. Everyone's gunning for it. But look, on the materials side, on the metal side, how are we going to get there? Are we going to see supply tightness that's going to slow it all down dramatically this decade? You obviously follow the metals markets intimately. Do you see certain metals outperforming within the battery metals complex?
Yeah, well, battery metals are quite fascinating, and that's why I'm not involved in battery metals, because batteries right now, we're in the early stages of electrification of vehicles, right? So we don't know what technology is going to work well, right? So if we're looking at, people are talking about, let's say, nickel or cobalt, right? Those are the two, trust me, nickel and cobalt are in the crosshairs of every scientist globally working on the next big thing in battery technology. So if you look at mining, for instance, and you look at, well, let's say we have a big cobalt deposit in some country other than the DRC. Let's not even talk about the supply concerns of coming out of the DRC. But by the time you build the mine, you get it up to production, you get your capital back, you're looking 6, 7, 8 years from now. Well, I'll tell you, in 6 or 7, 8 years, I'm not 100% convinced to what extent cobalt will play a role in the next generation of batteries. With respect to nickel, same story. They're looking at replacing nickel in lithium batteries with other commodities as simple as iron. So everybody's trying to engineer out the expensive metals like nickel and cobalt. And that's awesome, because that means for the consumer, if you could substitute iron for nickel, you're going to jam down the price of your batteries. So that's a trend that's going to be happening here. And for the massive adoption of batteries, you're going to get a lot of that stuff. So I personally believe, given the longer, I have a little bit of a longer term horizon.
Right.
I'm not jumping on cobalt. I never have. I've never been a believer in it. It's just been too focused production out of Congo. It's way too risky. There's no way we're going to base our entire EV transition on one country that is reasonably unstable. And with respect to nickel, nickel's another one. It's many dollars a pound, right? So you're looking at, people will be looking at replacing that one with something cheaper. And if they could do it with iron, I applaud whoever does that, because whoever is able to make that transition, they'll just shut down. They'll make the ones with using nickel uncompetitive. So it's quite a risky thing for me, who I'm involved in, finding the deposit, getting it drilled out and built. So it's, for those things, I view battery metals a little risky. The one I do not view as risky is copper, because copper, it's very difficult to substitute that out. So my personal view, if you have a long-term exposure to this sector and you want to play electrification, play copper. It won't be substituted out. We'll need a lot more copper. EV cars require 3 times as much copper as the traditional internal combustion engine. You'll need copper to build out the infrastructure. If for everybody who lives in around the world, if I want to put an electric car in my garage, I'm going to have to get an electrician in, and he's going to probably charge me $1 bazillion for all the copper wires to put the new charging station there. And this is going to happen around the world. That's a lot of copper. And not only that, we'll be also looking at additional power plants, probably increasingly nuclear, which will require copper to help build that too. So I'm very bullish on copper. It won't, it'll be less likely to be, because there's really no realistic substitute. In some instances, you could substitute aluminum, but copper, I think, is a way to play it on a safe basis. And you could play it in scale. There's some big players. And
I was going to ask in that case then, copper's been on a tear in terms of price, and how do you invest in the market then if there aren't enough quality copper mines coming online into production? where do you look, and where have some of the winners been that you've seen in recent years?
Oh, well, one of the benchmarks is like Freeport, for instance. And so for the big investors who want a good quality stock with, lots of liquidity, that's the way to play it. Where I play in the junior resource market, I look for junior copper players. I've been involved in the Cascabel discovery for probably about 5 years. It's one of the world's top 5 undeveloped copper projects. And it's going through a few management hiccups now. They've got a new interim CEO who's I spoke to the other day, amazing guy. And that's the way I'm playing it because I'm not I don't think I add much to my investors by investing in, blue chip names, but a lot of people can't invest in juniors or don't have the expertise. So I'd recommend sticking with some of the big copper producers. They're going to do fine in a good copper market.
Yeah, but in terms of the juniors, when you do get these quality projects like SoulGold, they're few and far between. Do you see more of them coming online now that we're in this commodities bull market, now that the demand for copper is, quite clear and the copper price is looking more favorable? Or do you see it as still a very difficult landscape for finding the new deposits?
Yeah, it is tricky for sure. But I think what's going to happen over time is as the price of copper increases, it makes projects which today might be marginal, it will make them economic. And companies like for instance, SolGold, it'll put us firmly into the black with $15,000 a ton copper. But right now we're not there yet. Some people are calling for copper that high, but like the metals market has an uncanny ability to meet demand. And the way it'll happen is if there is tons of demand for copper, copper price has to go up. The mines that no one would ever think of putting into production will get put into production eventually, and that'll help satisfy some of that demand. But there's a supply-demand equilibrium price, and I think it's higher than it is today. And a lot of the copper mines that are in existence, they're the big ones. They're getting older. They're getting tireder, and little by little, as we need more and more copper, price of copper will go up, and then we'll start pulling out some of these old retread copper projects and putting lipstick on them and getting them put into production.
Yeah, certainly. Are there a lot of old copper mines out there that have been sort of wound down, sort of shut down for environmental reasons, and brownfield sites that are going to get up and running again?
Yeah, copper. I have not been following the big guys because it's not sort of my space.
Yep.
But it's surprising. I was speaking with a mining engineer the other day about big copper projects, which Cascabel at SolGold will be one. He says once you get these things built and you get the capital in place, the infrastructure in place, the workforce in place, once they get 20, 30 years old, and so long as there's still some level of grade left, once you've already fully paid off all your capital, you're just looking at variable costs, right? So that's what's interesting about these things. And sometimes these big mines could last forever, but their production profile just drops because they're mining quite a bit lower grade, but still economic for them to yank a little bit of copper out of the ground because everything's already in place to do so. And for investors, that's the big problem too you've got, is when you have mining companies with uneconomic projects running around telling people, well, XYZ large copper company is mining, 0.25 copper. And you're going, well, yeah, that's kind of true. But they started mining like 3% copper 100 years ago at that deposit. And the only reason they're running 0.25 is everything's paid for, and they've already got all their permits. They've already got everything all done. So it's really a variable cost thing. It doesn't factor in the capital cost. So that's one thing I've learned in my career that might be worth thinking about here. But
yeah, absolutely. I just want to pick on nickel again, just on some of your earlier comments. I understand your point around the long term and that battery cell manufacturers are looking to design this out, but then you hear it's going to play a significant part in the batteries over the next sort of the near to midterm, and the higher valued vehicles, Porsche, when they get to an all-electric model, will probably contain the nickel sulfide, which is the higher, more premium material. And the batteries are going to be able to perform in different ways. Nickel is going to be quite high performance, therefore more premium, perhaps. Does that sort of thing not entice you as an investor, or is it purely a case that nickel takes so long to mine and produce a quality battery grade that process is too much of an added risk on top? Is there anything else as to why you're not so keen on nickel?
Well, I love nickel, and I've been looking for the past probably 15 years for a high quality nickel sulfide deposit, and I have not found one. So actually, until recently, I found one. It's a private company, so there's no use in me sharing the name. But they are extraordinarily rare to get a high quality one. We're talking grades of around 1.5% nickel. So I'm not saying an idiot can put it into production, but let's put it this way: if somebody said, Warren, here's 1.5% nickel plus ancillary metals, can you put this into production? I'd give it a crack. You know what I mean? Whereas some of these other nickel projects that are, fractions of 1% and low recoveries, and you need to truck to a smelter, and the smelter is going to totally take advantage of you. And those are the projects I don't particularly like. Now, with respect to the nickel market, it's really changed with the advent of non-nickel sulfide supplies out of Indonesia is one of them, for instance, and they seem to, whenever the price of nickel runs up, the Southeast Asia seems to flood the market with as much nickel as it needs. So I don't share Elon Musk's concern about lack of nickel, and so anyways, I don't necessarily share the massive price spike in nickel. And again, long term, you just triple the price of nickel and then see what happens with substitution. Substitution will happen. So, but anytime nickel has seemed to have run here, there seems to be ample supply filling that void from non-sulfide type deposits. But if you could ever find a tremendous nickel sulfide deposit, they are so rare, you have to jump in and invest in it. And that's what I've been looking for the past 15 years. I've had a guy on retainer, one of the top nickel experts in the world, working with me for 15 years. He passed away last year, unfortunately, and over the last 6 months, I've come across what I believe is an extraordinary nickel sulfide play. But it's early days right now. It's not even public, so hopefully that'll turn out well.
Yeah, can you share maybe where it is?
It's in Africa.
Okay.
In a good country in Africa. So
not DRC. You're not favorable on DRC.
Well, DRC, I've invested in the DRC through Robert Friedland and his Kamoa, Kapushi, and Kokula deposits, and he's got extraordinarily amazing copper deposits there, and their big zinc is pretty extraordinary. But the DRC, I've tried to do a mine there, and I can't really get into what happened, but it's they're not first world yet, and with respect to how we operate, and the people who operate there, I applaud them. It's a tough place to operate, and if they're able to operate there within the realms of North American laws, I tip my hat to them, because it's a tough place to operate.
Yep, absolutely. Okay. Great. Well, let's come back to the sort of the energy transition and what it's presenting to other mined metals or minerals. And I wanted to ask you about your thoughts on coal, actually, just because, I think you've been active in coal before, and it was a huge part of the energy mix, still is in China, etc. But it seems like, the future looks quite bleak. Do you have a take there on sort of coal versus other energy sources, and how this might play out with the fate of mining companies at the moment?
I think my involvement in coal has been in metallurgical coal, the coal used to make steel. There are some technologies people are working on to replace that, so that you don't have to use met coal, you use hydrogen. That's one technology possibly that could work. Other people say that the current technologies with hydrogen can't get the blast furnaces up hot enough to create the steel we need. So I think over the next number of years, that's not going to be replaced. Now, as far as thermal coal, this coal you burn in power plants, I think around the world, the more developed countries have eliminated any new construction of thermal coal power plants. There are countries that actually need the energy, like India and China, that are probably a few years away from doing that, but they have climate goals they want to reach. But I think they're playing climate goals versus, hey, we need electricity to power our factories. So I think coal will play a role for both, some of the big economies like India and China for the next little while. But I think they're trying to phase it out. China, especially, is going nuclear, which I think is the correct way. And frankly, I think it's the only option for modern society here at the present time within the realm of reality of technology.
Yep. Interesting. So you're bullish on uranium. Obviously, uranium's done very well this year, and certainly the stocks have doubled off the bottom, I think, this year. What's caused that sort of spike in such a short period? Is it just that sentiment that you just explained? Or is, the uranium, how do you see the state of play in the uranium market right now?
The uranium market, I have never seen such strong fundamentals for any commodity in my career. It's pretty outrageous what's going on there. You've got, let's take a look at the overriding theme is, you've got the EU and the Biden administration both pushing nuclear. They're saying, hey, we've had a significant amount of our power grid powered by non-CO2 generating baseload, reliable, dependable energy for half a century, causing no problems. It's safely operated, and it's, in fact, the nuclear is the safest form of energy in the world of anything for grid scale. And they're finally waking up to that, and they're trying to push the agenda. Whereas originally, as you're aware, there was really only solar and wind, which are, in my opinion, fantasy energy sources. Like here in Canada, when you've got no wind and it's and you're overcast and it gets dark at 4 o'clock in the afternoon, and you've got minus 25-degree weather, we don't want to end up like Texas, for instance. So nuclear is a pretty amazing energy source. People are figuring that out. So to power nuclear reactors, you need uranium, and there's demand for about 190 million pounds a year for uranium. There's production of about, let's say, it's moving around quite a bit, moving target, but let's say 140 million pounds. So there's a significant supply deficit there. And I've never seen this in any commodity before, where the second largest producer of uranium, Cameco, has both their major mines shut down or producing zero. And they actually are going into the spot market to buy uranium to fill their long-term contracts. Then we've also got permitting issues for any new uranium mine. For instance, Berkeley's having some tough time in Spain. I don't know where they are right now. I know they were having some real tough times several months ago. Maybe things have improved for them, but there's definitely a not in my backyard view with respect to that in Spain anyways. And so we're looking around the world, and there's not too much coming on stream. And then this year we're going to lose a big mine in Niger. We're going to lose a big mine we're going to lose Ranger, and we're going to lose Cominac in Niger. Two big mines. I think combined they produced around 10 million pounds a year. So, and then what's happening is you've got the supply deficit of 50, and people are saying, well, some the bears are saying, well, there's lots and lots of uranium out there, but we're going to find that out pretty quickly, because when you're chewing through 50 million pounds a year of secondary supply of uranium, let's hope they have some stockpiles, because if they don't, it'll be going through the roof. And to show how bullish many of the producers are, you have the guys like Denison and Boss Energy, and I think UEX and UFC and Yellowcake. Well, Yellowcake, as you know, is sort of a proxy for uranium, but they're actually in the market raising money and taking that money and putting it to work. And I think Yellowcake's got around, if I'm correct, they're going to be buying like 3.5 million pounds, for instance. So I've never seen it where one of the major producers of uranium is shut down production until they get to the levels that they think is a fair pricing. And there's no real significant mines being built. There's mines being closed. And And the whole demand for the whole energy cycle, people are figuring out you need uranium to power these nuclear power plants, and nuclear power is the answer, certainly over the next many decades, to produce baseload non-CO2 generating energy. We've already dammed up all our rivers, and I'm telling people who are, I'm obviously a uranium and nuclear bull. I said I would love to see the day where uranium and nuclear technology has gotten to the point where we're producing energy so cheap that we start tearing down some of these dams that are damming up our rivers and just get the water flow back to what it was naturally, and things like that. We're many, many decades away from that, and possibly it'll never happen, but you could always dream. But there's some incredible new technology with modular reactors. They're fail safe, and they're very, very cheap. So I'm really excited about uranium. The big question mark with uranium, the fundamentals look fantastic. The question is there a stockpile of 300 million pounds sitting out there that's being fed into the market that's going to keep a lid on it for a while? And that we're going to find that out over the next few years. But there is one hell of a bull case if that is not the case. And there are some people I know that are convinced there is not this big inventory out there to hit the market with.
Yeah, certainly. And if we don't see that inventory come online, we could see prices sort of looking at how they were a few decades ago when we saw that, the peak price.
Yeah, I think it was around the 2006, 7, 8 kind of time frame. We saw about $140 a pound. And right now, uranium is around $30 a pound. And I think for producers like Cameco to come back on stream, and many of the North American and non-Kazakhstan producers, also the cost of producing uranium is quite high in, for instance, Africa and Namibia. For instance, the Chinese have a project there. For those non-Kazakhstan projects, we're looking at probably $75 before anything new gets built. So it's more than a double. And my sense is if we're sitting with spot $75 uranium, these stocks will have quintupled from here. So there is tremendous upside potential should there not be massive amounts of secondary supply hitting the market and surprising all of us.
Yep. And are you totally uninspired by renewables, or do you think that renewables will sit on top of uranium? So you've got your base load of uranium and then a nice addition to it. And, coming back to what you said about, the Texas grid disaster, surely the challenge is beyond just the primary supply. It's the whole grid system needs updating and improving, and an energy trading network, a bit like the sort of European system, could be more beneficial for North America.
Well, we definitely, I think it is well known even before Texas that the US has not spent the money on grid. So hopefully Biden will realize, okay, we're going into an EV transition. We'll need a much more robust power grid if we're going to be powering all these EV cars, right? You just can't, like the demand factored in of all the EV will definitely bump up things. Your comment about renewables, and it's funny, the Europeans are trying to make nuclear renewable, or in that renewable.
Just sneak it in that bracket.
Yeah, well, it's funny because when I argue with people who are environmentalists about whether nuclear is renewable or not, they go, well, it's not renewable. And I said, well, is solar renewable? Oh yeah, it's renewable. I said, well, what's burning, do you think, of the sun? Isn't the sun burning? Do you think that'll burn like forever? Do you think that'll eventually run out? And I said, well, I can assure you, there is so much uranium on the planet Earth. We'll have so much power for the remainder of mankind. The question, of course, is at what price can you extract that uranium? And there's rumors of these technologies out there for $250 a pound. You could extract it from seawater. So perhaps the seawater extraction is the upper bound. So uranium's $30 and $250 will be the absolute top, and that's when you start extracting it from seawater. So that's what's amazing about nuclear power is we have lots and lots of fuel. And same with you're looking at wind, and wind is really powered by indirectly is really solar power, right? As the sun creates the wind, right? So the problem I have with let's say wind is it's just Stone Age technology. And if you look at any photos of a 20-year-old windmill and what it looks like and how they're unservicing it, and then they have to take it apart and just throw it into a landfill site, it's just a terrible mess. Whereas, you've got nuclear reactors that have been running since the 70s, and they're going to extend them for another 30 years. Like these are 100-year power plants, possibly even longer. But you get like a 20-year life out of some of these windmills. So, it won't be that much longer before we see these big broken windmills in the horizon, and we'll have to yank them down and throw them in a landfill somewhere. And can you imagine the size of that landfill? And then solar, what do you do? Solar's changing every day, and there's new technologies. So perhaps, we'll get to the point where it'll be much easier to just throw them on your roof and you won't even notice them. And it'll feed into your grid, and backfeed it to the utilities, who knows? And we're at that stage in some instances already. But as far as, good solid base load, my money's on nuclear.
Yep, interesting. And the renewables thing is quite positive for rare earths, though, and certainly silver as well as an industrial application. Do you like those metals as well, or are these sort of the niche metals required to go into the build of the renewable technology?
Yeah, well, I've looked at these niche metals before, and silver is not a niche metal, but the others are. And the reason people are saying, well, China's got the lock on this market, and the reason they have the lock on it is that I'm not sure many people talk about this, but I'll state the obvious: is they have very little in the way of environmental constraints. So if I'm operating a specialty metal refinery here in Canada, and I'm competing against somebody in China, well, guess who's going to be able to produce the rare earths cheaper? I do not have a hope of competing with the Chinese. So if all the big computer manufacturers and all the solar manufacturers, if they're pushing the costs down, which they've been doing, and not caring about where it comes from or the environmental damage caused by creating the rare earths, you're going to source it from China. And then China, of course, has kind of shot themselves in the foot recently by using it as a bit of a strategic lever against North America. But the reality is there's rare earths around the world in all sorts of places other than China. It's just that China doesn't seem to care about their environment with respect to refining it. So it's tough to compete against that. But if the people who use these rare earths are willing to pay a premium price to have a North American or African or South American produced rare earth, it's going to be available to them. But therein lies the problem. You don't have an exchange to trade a lot of these rare earths. So it can be a very, very tricky market and a very niche market. And that's not a market that I get too excited about.
Yep, fair enough. Okay, let's talk about junior mining companies and how they've been performing of late. Obviously, it's a good period, wind in the sails. Equity markets have opened up, it seems, compared to how they were over the last decade, very bearish period. Are you happy with the way companies have performed generally?
Yeah, well, you take a look at, I guess you have to look at a couple ways. You'll have to look at gold and silver in one basket, and then the others in the other basket. Well, gold and silver companies, they spiked up on the big run, and gold sold off, and they came off. So that was no super big surprise to me, because people speculating in the gold market are going, let's ramp up the price, and then the price will go to the moon, and everybody, come on, jump on behind us. Well, guess what? When you're doing that, you're killing the demand for gold, which is a lot of gold goes to India, and the Indian consumers are big buyers of gold, but they're price conscious. And if you spike the price of gold $300 or $400 an ounce, they're going to back off their purchases. And during COVID, I'm sure not only the Indians, but there's some Indians and other people who've held gold as a store of value may have had to turn that into cash to meet living expenses during COVID if they lost their job or things like that. So by ramping up the price of gold, you've really killed the fundamental demand of it. So unless speculators continue to pile into the gold trade, it's tough to hold that on. I'm very bullish on gold long term, but just near term, I think that's kind of what happened, and that's what shut things down pretty quickly. But long term, I'm bullish on gold. Short term here, there's been a bit of a setback, and I think we just need to work through these levels and get the economies back on track and get people back buying gold again and comfortable with the new higher price, and then they could gradually move higher over time. Yeah. Now, as far as things like copper, well, we've had many fold increase from many of the copper projects, so they've done well. The uranium companies, they've run in advance of really a significant move in the price of uranium. Uranium hit a few years ago around $17, $18 a pound, and now it's 13, so that's good. But it's really people who just started noticing uranium juniors here recently.
Yeah.
So I think what we need, we've had a bit of an initial run. We need a bit of a follow-up with the spot price heading higher before we'll see that continue to move forward. Copper juniors, like the copper seniors have done very well, but people haven't moved into the copper juniors from what I could tell quite yet. They're still reasonably cheap. So I think over time, as the market gets a little frothier with the majors, then people start looking a little bit downstream and looking at some of the smaller cap names or the up and coming developers. So that hasn't reached that stage quite yet. Looking at nickel, there's been a bit of a hype in the nickel companies. I've seen a number of nickel companies that have projects which are not economic at these levels. They're playing this whole, they're hyping the crap out of it with Elon Musk, we're there for you, we'll provide you with the nickel you need, but they don't mention that it has to be at a much higher price than it is today, or their mines are not economic. So that's, I think that nickel's probably taking a bit of a breather here, and I am concerned about nickel for a bit, just due to the fact that there seems to be always supply hitting the market when the price does show any strength. So copper's done kind of well, and
the nickel juniors, you think have got a tougher task to actually bring that supply, into production to get to development stage than the market sort of suggests at the moment.
Yeah, exactly. And what happens is during a boom in a lot of commodities, you'll get old retread properties which wouldn't work the past 5 cycles, and that's why the majors drop them, right? And then the people take on these and promote the heck out of them, and all you have to do is just take the grade, take the recoveries, and then realize they're going to get ripped off at the smelters. And I remember one nickel prospective nickel company talking about, oh yeah, we're a cobalt producer. Then I looked at the grade of cobalt. I said, are you kidding me? I said, you really think the smelter's going to give you any of that cobalt? The smelter's going to keep any cobalt in your concentrate. You'll never get any of it. So don't go calling yourself a cobalt producer. So there's lots of nonsense like that going on in the marketplace, which, and that's the reason when I look at nickel, I look at high grade nickel and nickel sulfides, because the smelters are not very nice to you. If you don't own a smelter, they're not very nice, and they try and take a lot of the economics of your project from you. And if you have lousy economics to begin with, there's not a hope you're going to make any dough.
Yep, that makes a lot of sense. Yeah. Okay. Just coming back to the gold companies, because you obviously mentioned you're bullish on gold, but you didn't say are they good value now? Now the price has sort of dipped a bit, and we've seen a bit of a correction. Are the juniors good value at the moment?
I'll tell you where I'm at right now. Like I'm in the early stage juniors, so I'm sort of not necessarily, for me to make money in the junior golds right now, I'm not counting on a short-term increase in price. I'm looking at discovery. So I've got a few discovery names on. And do I think they're expensive? I can just say of the ones I'm looking at and the ones I own, they are actually reasonably expensive. And I actually think in some instances too expensive because people are almost factoring in a discovery before we've actually made one. So there's a bit of a froth in some of the juniors I've looked at. I can't really expand them outside of the core group I'm looking at. And I think it would be unfair for me to comment on all the other juniors because I'm sure there's a lot of guys out there thinking their junior gold companies are cheap, and they may indeed be, in fact, be cheap. But the ones I'm involved in, I think, are a little expensive.
Okay, that's fair enough. Do you think M&A coming into play, or maybe we're about to go into a real uptick in M&A activity? Do you think that could be contributing to this froth to some degree? People are looking at companies thinking they're going to get taken out because the majors need to replace these ounces that they've not got yet.
Yeah, no, exactly. So, there's nothing like an M&A cycle to kind of get the money recycling. And what happens is And a typical junior investor, if they get bought out at 2 or 3 times their market value, and they've just made, maybe because they've been in before, they may have made 5 or 6 or 7 or 8 times their money. They're feeling pretty good about that, and oftentimes they won't take that money off the table. They'll say, "Hey, that was great. Let's do it again." So they'll spread it amongst the others. I saw this in the '90s, and I remember when that led to that whole Bre-X fiasco in the big, massive, incredible hype and bubble in the '90s in the resource sectors, because Robert Friedland made the big Voisey's Bay discovery and popped $4 to $5 billion into the hands of junior resource speculators. Well, guess what they did? They just put that back into the market. And I remember, like, if you're talking about froth, we haven't seen any froth yet. Like in the '90s, I remember pretty much any junior with a management team, a property, it didn't matter how good it was, and a listing had 100 million market cap. And that was 20 some years ago. So we're nowhere near super frothy in this market yet. And we'll see if we get to what extent we get frothy. The last cycle in the commodities market, we didn't get super duper frothy. We got to a reasonable level, but we'll see what happens here. We've got a tremendous amount of money being spent on infrastructure programs, which will be definitely positive for commodities. And we have a lot of, there's some inflationary pressures too. So that could be good for commodity prices too. So let's see what happens. And hopefully we have a nice big decade-long run, and even Moron's going to make money on this one, hopefully, because there's nothing like getting onto a good 10-year trend to make a pile of money. That's for sure.
Yeah, definitely. Well, perhaps just to wrap up then, just want to get your insight on, as a fund manager, are you looking to deploy new capital now? Is now still a good time? And then also, when do you take profits off the table? When, you're obviously a long-term investor, but there's got to be a point when you think of cashing in on some of your positions. And now with the optimism coming back, I just want to get your take on those.
Yeah, well, I've got basically what I do is I buy junior, I buy very, very early stage companies, and then and not all of them work out, and I just weed them out, and gradually a number of them go to big discoveries. Like there's 3 big discoveries I'm involved in right now. And so I'm waiting for them to get bought out or get to valuations that are so ridiculously high, I'll just sell them into the market, right? So, and when I do get bought out, I will recycle some of that cash into the cheapest juniors I could find that have the best upside. And so there will be a recycling. I will definitely be recycling the money back into the market, because there are some really good opportunities here. But we do need an M&A cycle to free up a lot of that capital, because I have a fair amount of capital. My view just generally is, like, for instance, let's take a look at SolGold. I don't own it through SolGold, but I own it through Cornerstone, which is their partner. If we don't get paid big money for making one of the world's top copper discoveries, if we don't get taken out by a major and get paid big dough for that, why do I want to reinvest that money looking for more copper again? Because if we can't get bought out of Cascabel, why bother? And we need to get paid for all the effort we put in and all the pain we've gone through for the last 6 years in drilling out this deposit. So once it's proven to me that the majors will pay good money for some of these companies that I do own, then I'll feel a little bit more comfortable recycling it back into the juniors, and we'll find the next big copper deposit, and again we'll run it through and sell it to a major again.
Yep. Excellent. And just finally, now's a good time to be an explorer, right? Would you agree that sentiment's probably the best it's been for a while, and that actually, exploration is where the upside is at? So if you're a junior or an earlier stage greenfield project, you should feel quite positive that investors are going to be coming back for these stage projects.
Yeah, absolutely. We basically, the financing window is open. You are able to raise cash to go and drill those properties that have been sitting on the shelf for the last decade, and you couldn't raise money to drill. So it could be an exciting time here. And last cycle there weren't a lot of super big discoveries made, but definitely in the previous cycle there were. So my fingers are crossed that we've got some big super discoveries to be made. and investors will make, like, there's nothing like a multi-billion-dollar takeout to liven up the junior market. And so let's hope a few of those are coming down the pipe, and because they're definitely financeable. There's lots of drills turning right now. So if you could combine a couple big discoveries with a 10-year bull market for commodities, there could be a lot of money made the next 10 years.
Yep. Excellent. Well, that's great, and that's a good positive note to finish on. Let's hope for some of this M&A to pick up. Warren, thanks very much. It's been excellent talking to you and getting your insights on some of the hot areas within this commodities bull run. And I look forward to catching up again soon.
Well, thanks so much, Adam. You take care. Cheers.